folks. Welcome to Sunday Night Futures Live. I'm trying to go live on Rumble. I've been being haunted by folks to get on Rumble. I've wanted to because we want to expand away from just using the censored platforms like YouTube and Facebook and Twitter and whatnot. And let's see if we're live. Hopefully we're live. You may hear an echo for, I don't know if we're live. If anybody's out there from Rumble, let me know if you can hear me, okay? All right, let's get to it. We got a crazy week in front of us, folks. I do not like the price action. I do not like this market. Futures were up a moment ago. They are now negative slightly. Not a big deal. Let's drill down here. 15-minute view. Gold surged out of the gates. Look at this. Gold wants to go higher. We opened. Where did we open here? What was the high? 1814.70. Some big buyer was out there right at the gates. That's good to see. We have a very, very large position now in the gold mining stocks because, and I'm going to go over the reasons why in a moment. But this is promising. It's good to see. Hopefully, it stays that way. Let's put up an alert here. I want to know if we break out to new higher highs. There's some buying going on here. They're trying to keep a lid on it. Before we move on, let's say hello to everybody. Canada trucking along. Yeah, you know what? In a way, I was happy to see that GoFundMe did that to them. I knew they were going to do it. I was going to donate to them. And I saw they were using GoFundMe. Why anybody uses Facebook, if you're from the conservative side, or if you're from a populist side, a nationalistic side, why anybody uses Facebook or GoFundMe? GoFundMe has a horrible history of doing this stuff. They should have used Give, Send, Go. Now they're over at Give, Send, Go. I'll donate to them using Give, Send, Go. ARB. BKKT. All right, VKKT. I'm purposely taking my time here. I want to see if gold bounces. Eric. You like that, huh? Rumble is the alternative to YouTube. And you just made me want to check to see whether or not we're finally live there or not. I don't know what the story is. They have a very wonky way of live streaming. I've never seen anything like it. There's no logic to it. I'm going to end the live stream. I'll show you what I'm doing here really quick. There's no great secret. So this is the back end. It says I'm streaming. Waiting for stream. I'm going to end this live stream. Yes. Set up a new live stream. we go. Go live right now. It wants me to. I'm not dealing with this right now. Okay. Let's go through the rest of the hellos. Hey, well, live. Thank you, Paul. Hey, Paul. Nope. Hi, everyone. Hi, everyone. The microphone would help. Okay. Yeah, same name on Rumble. I did have a good weekend. Thank you. Except for my pipe burst, but it was a small one. Plumber took care of that. $500. I told my son, if you can't make it into medical school, become a plumber or electrician. Snap. Hey, Ben. Hey. Gibson goes. They're up to 3.4. Last I looked, they were like 2.6. They have a denial of service attack on them. They've been down like 70% of the day. Really horrible. Hey, Tom. What the heck is going on here? What is username on Rumble? Username on Rumble is the Contrarian Trader. I'm not seeing any spaces on here, so it's all one word. The Contrarian Trader. It's harder to search there, but once you find it, it's okay. Yeah, Rumble's, it's evolving. They have a lot of work to do. I mean, YouTube has, 20 years on them? Need to add Rumble link to your description. Went to Rumble, can't find and search. Yeah, I got to change a lot of stuff because we got to migrate away from these legacy media plays. Because one day they'll come from me. I'm pretty tame when it comes down to the stuff I say, but I'll say something benign one day, and some purple-haired freak that lives in his mother's basement will ban me from YouTube. Gold's really, they're trying to keep it down. It wants to go. We're up at 810 now. All right, let's see who else we have here. I can't find it. I canceled the stream. All it was doing was they make you upload like a pre-video, like populate the space. It's really weird. And when I went live, it didn't turn me live. It was just weird. See who would help Gibson go with it. Oh, good. That's good stuff. Good. Hey, Randy. Hello to you. All right, let's get to it. We have gold, which stormed out of the gates. Apparently, some player out there tried to blow out a bunch of stops above by spiking the price. Normally, we get a crash. This is a rarity on a Sunday night where you see a pop up higher to this magnitude. But of course, the manipulators are trying to keep gold down because it humiliates the federal government, because gold is the only real money. The dollar is a currency, but it's a fiat currency, and it's a flawed currency. And if you took a look at the U.S. dollar price action last week, it was an absolute and utter disaster. So we're going to go over that chart in a moment. Let's take a look and see what the dollar is doing this evening. Sorry about that noise. I hate that. The dollar is up slightly. Let's go to equities. All right, so the S&Ps are back up again. They opened up, went red, now green again. In essence, flat. By setting these alerts, it just gives me a feel for the price action and what the mood of the market is on a Sunday evening. It's light volume, obviously, but you can get a feel for how we might open tomorrow. Let's take a look at the Russell 2000. It is up, pulled back to fill a gap. Now it's negative, so in essence, flat. The Dow, also flat. They sold into it, sold into strength. Where are my NASDAQ 100s? So last week, we didn't do much in terms of earnings trade. I did not trade Facebook. I was too afraid to do the Facebook trade. And thank God I didn't do that trade, because it would have been, if I did a strangle, I would have lost my shirt. If I did a iron condor, I would have felt max pain on that trade, but it would have been limited. Where are my NASDAQ 100s? I had it up here earlier. NASDAQ 100 up on the session, just off of session highs. Taking a look at more commodities, I want to spend a little bit of time here. Lean hogs up. I know it sounds crazy, but if you've been in the protein aisle, the meat aisle of your supermarket lately, prices are skyrocketing. So this is a nice sound base where hogs can move up higher. These are weekly charts right now. Let's go to copper. Copper is looking the bomb. Long consolidation, and we're breaking out. We have broken out on the week. So copper's going up higher. Check back in with gold really quick. I want to pull back on gold from a 15-minute chart. Go to an hourly. And you can see that all last week when we had some selling at the open on gold, what they did, and this holds true for the gold mining stocks as well. So they sold off gold twice last week. And what happened? Buyers just jumped on it. That's a huge signal that there are bids below. And there's a floor below here at that 1790 mark. And what's key is that we closed last week above 1800. That is psychological support now. It was resistance. So the longer we spend above 1800, the more it becomes a floor, the more the continuation breakout on gold becomes reality. Remember, we broke out on gold monthly time frame back in December. Consolidated January. Now we're looking for a continuation move up higher this month. And for the year, gold is outperforming the S&P 500. So you're going to hear a lot of naysayers about gold. Ignore them. Look at the charts. Tell them to pull up a chart of the S&P 500 and gold. See which one you would want to own year to date. Nat gas, really getting hammered here. Gap down. Gasoline, woo. Continuation move up higher. And a breakout on an hourly time frame. Silver really began the rally last week in advance of gold. You could see same exact chart here. They tried to slam silver down twice. Immediately thereafter, buy orders. There are bids below. And the second round of bids came in higher than the first round of bids. So what you're seeing is higher lows and higher highs. That's exactly what you want to see when you're coming out of a nice sound base. Wheat down. What is it looking like on a weekly chart? A little bit sloppy. A little bit sloppy. It's in a rising uptrend channel. Soybeans. Oh, look at soybeans. Holy cow. They're going. They're going up higher. This is a breakout. Hourly time frame. We haven't closed there yet, but my guess is we're going higher. Weekly chart, soybeans. Oh, what a chart. A bit extended relative to the third standard deviation Bollinger Band. This weekly chart does not include tonight. It's from last week. So we're moving up higher already. I was pretty sure Nat Gas was going to sell more. No trades, unfortunately. Cold would have been a good ticket to paradise. Okay. Good evening. Any pins? Drillers such as HP. HP, which one is that? I like the drillers. Paul, thoughts on the banks for the week? Yeah, if we see higher yields, all right, so the banks will naturally move up higher on rising yields. Let's check out yields right now since we're on the topic. So this is the 10-year Treasury note. All right, so this is the bond price. So bond prices at current are moving lower. It's showing this positive here, but it looks like we're down versus Friday. Anyway, it's showing this positive. The chart's not lining up here. If bond prices are higher, that means yields are lower and vice versa. So let's do a hypothetical, because you had a big move last week on bonds. Bonds to the downside, yields to the upside. Banks like rising yields. The problem is not every sector likes rising yields. So as long as you don't have the S&P 500 buckling under the pressure of rising yields, the banks will do well. If yields trade sideways, the entire market could rally, including tech. If yields move up higher, the market could still move higher, but I wouldn't look to tech to lead the way. I would look for the banks. I would look for energy. I would look for potentially the transports. So I like the banks. We own the banks. I want to add more. They're at weekly resistance right now, so I'm not ready to pull the trigger yet. I have a buy target in mind, but I want it to be at a higher price. I want to see a weekly breakout. Yeah, Bitcoin had a very strong past couple of days. Now it's at 42,500. I think that what Bitcoin traders are sniffing out is that the Fed is not going to be as aggressive with rising yields. If you take a look at the CPI, Consumer Price Index, and Bitcoin, they're correlated. They're correlated. The only reason why Bitcoin has gotten hammered of late, and I thought it was going to go down to 30,000. Actually, I revised my price target. I'm going to still stand by it because I'm not convinced that the sell-off is over yet to 29,000. If the markets believe that the Federal Reserve's rate hikes will tamp down the CPI, Bitcoin's going to get hit. However, if the Bitcoiners are realizing, hey, the Federal Reserve is not going to be able to fight inflation, they're not going to be as aggressive as they say, then you want to buy Bitcoin. So if Bitcoin rolls over, if this rally fails, I'm going to be looking to short MicroStrategies. So that's a trade that's on the table for whenever Bitcoin breaks. But right now, it's a very strong chart. Oil down, looking pretty weak here. Let's go to an hourly chart. Cattle, not doing much. Let's go to a weekly chart really quick. Well, this is a monster chart for cattle. I mean, this is going up. This is a long consolidation. You have very tight Bollinger Bands. This is a very tight consolidation. And we're at the precipice of a breakout, a major breakout. So probably the best investment you can make right now, spare freezer, put it in your garage, your shed, wherever you have electricity, and stock up on meat. You're welcome, Paul. How about FAS to play the banks for trade? I own it. That's my trade on FAS. So yeah, I'm all for it. But right now you're at a weekly resistance level. You need to see a breakout above weekly resistance. All right, so those are the futures. Let's just circle back really quick because gold has really interesting price action going on. I would love to see a short squeeze here. Let's circle back to silver. Silver's looking rock solid here. Rock solid. Look at this weekly setup on silver. You've had two head fake breakouts. Looks like we're going to go for third time, maybe the charm for silver. And we own silver. I don't own gold. I own the gold mining stocks. I own the silver mining stocks, and I own silver, a leveraged ETF, putting along silver called the AGQ. AGQ. Chart of DWAC. We own it. We own DWAC. But most on FinTwit don't tweet about it because of Orange Man. I wonder how many are silently trading it. Probably a lot, and a lot of them are probably going to be options traders because if you look at the premiums on those calls and puts, they're pretty fat. So for option writers that like that stock, I don't know how you resist them. I'm an option writer. I've resisted it because I own the common stock, and it's kind of speculative. But if I ever decided to sell the common stock, I'd sell the naked puts. At what price of gold would you sell your gold mining stocks? I haven't thought about that. We haven't broken out to new all-time highs yet. So I don't think there's necessarily a price per se where I would sell gold because I don't know what the future brings. I would have to be able to divine where inflation's going, where the dollar is going to bottom out. So I don't know, to answer your question. I don't know if anybody really knows that question. But normally, what happens at the end of a bull run on gold is that silver begins to outperform. Silver does a parabolic move up higher. And when I begin to see that silver's outperforming gold, I'm going to be looking at the price action on the gold mining stocks. If I see that they're pausing, they're looking weak, they don't want to go up as much, or if they've had a parabolic move up higher, I'm going to lighten up and I'll scale out. So I'll be looking for that. I don't have a price in mind per se. I'm looking for that spike up in silver and or a pause in the momentum of the gold mining stocks. So those are my thoughts on the exit point. But we're nowhere near that yet. I'm in this trade for the next couple of years, easy. I would pull some at 2,200 the ounce. Okay, for all I know, that's a sweet spot. You're welcome, Seymour. Okay. Switch to a 4-hour chart. All right. So we spent a lot of time here on the futures because they're very, very interesting tonight. But now let's get to economic data. Okay. So, folks, on Friday, the Bureau of Labor Statistics put out non-farm payrolls, and they revised up the December numbers, the January numbers, they blew the doors off of expectations, both on the revision and on January's read. I hear a lot of people saying they just don't believe it. And I've never heard before people saying, I'm really questioning non-farm payrolls. This is the first time where I've talked to people, and not just one person, a lot of people, and they're not buying it. But let's make one thing clear, very, very clear, is that let's say that these numbers are honest numbers. We still have net job losses in the country, because if you take a look at initial jobless claims, which came in at 238,000, well, you multiply 238, let's just say most months have 4 weeks, times 4. Those are 952,000 losses of jobs per month. So if we actually did add 467,000 jobs, we're still down almost 500,000 jobs for the month. The economy is in contraction. And you may hear about, you'll hear about the Biden administration crowing about the GDP read. That's only because manufacturers, stores, they build inventories. And God forbid they can't sell those products. Well, they're going to sit in those warehouses, and they're going to have to discount them at some point in time. So a build in inventories doesn't mean anything. You got to sell them. You got to sell them. So don't read too much into that. They're going to try to take credit, but there's no credit to be had there yet. This is a major concern. As a consumer, as a citizen of the United States, I like to see people making more money. That's a good thing. The problem is that Wall Street doesn't see it that way, nor do the corporations. They see this as a loss, and they're accurate. They're paying out more, and maybe they don't have pricing power, although a lot of companies do have pricing power now. So this is viewed as inflationary. There's some junk on my glasses here. It doesn't want to come off. All right, coming out next week, or this week, I should say, the NFIB Small Business Index, that'll move the IWM, the small caps. No real impact on anything else. Watch inventories. That'll probably beat. It's going to be a revision. Thursday, initial jobless claims. Ooh, we get the CPI this week. So an important week on the inflation front. So let's keep an eye on it. This is going to be a big week because these markets are at the precipice. They're trying to put in a higher low. Like if you take a look at the S&P 500, what they're trying to do is that they're trying to put in a higher low. They're trying to lure people in to get excited by that rally. And I said to members on Thursday, I said, listen, they're probably going to spike the market on Friday because you have short covering Friday. You have a lot of shorts that made a lot of money, and they don't want to go home too overweight on a Friday, worried about headline risk coming out over the weekend. So they'll cover those positions. So on Friday, you had okay price action. We did not close at the highs of the session. And in the final minutes of trade, we sold off. So if they move this market lower below 44.50 next week, look out below. If they move the NASDAQ composite down below the 14,000 mark right here, we're just barely there. Again, look out below. It's going to be a problem, a major problem for the markets. Now, what will prevent that from happening? Well, it all comes down to this chart here. I know a lot of you out there, maybe you're new to trading. You want to hear about the hot stocks that all the other YouTubers talk about. They get 40,000 hits on their channels. Folks, you got to watch the 10-year yield. You got to watch. If you're not watching it, you're not treating trading as a business. As a business, I always watch the 10-year yield, because the 10-year yield is going to dictate what sectors are going to perform and what sectors are going to underperform. If the 10-year yield breaks out, you buy energy, you buy banks, you sell stock, you sell growth stocks. If the 10-year yield rolls over, you get out of the banks, you get out of energy, you start going into tech, you start going into growth. So right now, we're at the precipice of a major breakout. This is an inverted head and shoulder setup. Left shoulder, head, right shoulder. And you could argue, if you want to use a 45-degree neckline, that we have already broken out. Right here. We've already broken out. We do have serious resistance up at a 2 handle on the 10-year yield. It will not get through there without a fight, because they do not, meaning the government, they do not want to see a 2 handle, because they know people are going to start to freak out. Now, going into the new trading week, we still have a very expensive market relative to historical norms. I mean, I listen to some of these YouTubers out there, and they're talking about how this pullback is an opportunity. Hey, you know what? Maybe it is. Maybe it is. What doesn't change is the fact that this is still a very expensive market. And names that do not perform well on earnings, and I'm talking about large S&P 500 companies, Netflix, Facebook, PayPal, if they do not perform, you're having S&P 500 stocks knocked down 20-odd%. That's unheard of. That's unheard of. So that's why I pulled back from doing earnings trades this quarter, because it's just too dangerous, at least on growth stocks. So we did do a short of Qualcomm on earnings, and we made money there. We did well there, 70% profit. But I'm still very reluctant to put on any type of undefined risk trades at this point in time. The Buffett indicator, we remain overvalued going into the new trading week. And here is the mean, right down here, the historical trend line. We are still 1.9 standard deviations away. That's a long way away from home. For this market to become valued fairly, we would have to retrace all the way back down here. That's a heck of a drop. Or GDP is going to have to expand dramatically, and or earnings per share of the stock market is going to have to expand dramatically. Earnings this week. We'll play some earnings trades. I like CMG. It's not a big growth stock. I like potential. I don't know about Twilio. It's a mid cap growth stock, and I'm worried about it. I'll see whether or not I could put on like a defined risk trade, an iron condor or chicken iron condor, something like that. Cloudflare. I'm worried about their report, because Cloudflare is supposed to be handling the security for Give, Send, Go. And that site's been down 70% of the day through denial of service attacks. So I'm worried about what they have to say come in this earnings report. May not be a topic, but it may. So I'm worried about that. Callaway Golf is one that may be interesting. Under Armour is interesting. Notice how I'm staying away from small cap to mid cap tech as much as possible. Datadog is a hot stock. Coca-Cola is not going to have any premium. One reason why I don't think the Federal Reserve is going to be able to be as aggressive as they would like to be is the yield curve. For those not familiar, the yield curve is when the spread between the 10-year Treasury bond, the yield, and the 2-year Treasury bond yield, they begin to narrow. You're supposed to get paid more for longer term maturities because you have no idea what's going to happen in the future, and you're locking your money up for 30 years. Whereas a 2-year, there's more clarity there, and it's not locked up for 2 years, not for that long. 2 years goes by like that. So those spreads are narrowing, and we are flirting with an inversion of the yield curve, meaning 2-year yields go higher than the 30-year yield. We've seen this recently. Late 1990, I'm still back in the 1990s. Late 2019, and we all know what happened in Q1 of 2020. We went into recession. So keep an eye on this. I can tell you right now, the Federal Reserve is. This is why when I see this, I can't imagine them raising rates aggressively into a yield curve that's signaling recession. It makes no sense. It would be historic that they're raising rates into a recession, potential recession. I'm not happy to report this, but the national debt is now above. I had the debt calculator up here before. Here it is now above $30 trillion. This does not include unfunded mandates. What are unfunded mandates? Loans, student loans guaranteed by the federal government, Social Security, Medicare, Medicaid, all that stuff. And it doesn't include unfunded pensions at the state level. So we have $30-odd trillion worth of debt. We're moving potentially into a recession, and you have Ford shutting 8 factories due to persistent supply chain disruptions. Now, some are in Mexico, but most are still in the United States. So if you see a trend where you're seeing factories shut down, yet our debt is continuing to rise, where do we get the tax payments to service our debt? You're not taxing corporations because they're not selling anything. You're not collecting income tax because employees aren't working. Where do we get that money? The Federal Reserve is going to have to borrow it. Trade of the week. We're going to be looking at the gun manufacturers. Either Smith & Wesson or Strom Ruger, because 13 states and Washington, D.C. are backing the Mexican government's lawsuit against U.S. gun manufacturers. This is a backdoor way trying to bankrupt the gun industry, therefore taking away your right to be able to carry arms. So they're going to do an end run on the Constitution by suing these companies and bankrupting them. So I don't know whether or not this is widely known yet, but we'll be watching these names to see whether or not they get sold off hard in the morning, because my guess is that as this becomes more widely known about what they're doing and what their goal is quite evident. What you're going to see is the sell-off get bid, because you're going to see a rush of people running out to buy guns, just like they did in the Obama years. And they're going to stock up on ammo. They're going to stock up on guns. So that way, if they do try to put these companies out of business, they'll have plenty of guns. So this may be a good long trade for the coming week and weeks. Will the numbers of likes reach new highs, yearly highs today? Oh, new likes? Yeah, like, please. Is that a reminder, Papa Pops? Hey, I haven't seen you in a while. How you doing, man? Trader Isaac. How does the gun lawsuit affect ammo play POWW? I don't know. I don't know how that's going to be perceived. That's a vertical play on this trade here. So I don't know. I know there's a shortage of ammo, POWW. I'm surprised this is not doing better. I would have thought they would be selling ammo hand over fist. Well, it was overbought. This is becoming interesting. Interesting. We'll keep this one. $3.76 is a nice price target for POW. We'll keep an eye on this one. Okay, moving along. All right, folks. Every time I look at the news, I cringe. So you take a look at what's gone on over the past 2 odd years, and it seems as though everything that goes wrong with this country is self-inflicted. The DAs being soft on crime, allowing crime to run rampant, people leaving the cities. COVID, the handling of COVID it was just so incompetent that it seems nefarious. And now we have 3 more years of this joke. 3 more years of this corpse in office, and we get this. We have warplanes flying over the Black Sea, engaging with Russian planes. Now you have the worst of possible deals that could possibly happen. An agreement between the Russians and the Chinese. I don't know what's in this deal, but the last thing we could possibly afford right now is a 2-front conflict between Russia and China. NATO is a skeleton of what it once was. We hardly have any troops over there. All we're busy doing over here is firing our troops and the elite troops, no less, the Navy SEALs that don't want to get vaccinated. That's what we're doing with our military. And plus getting nice woke lessons rather than combat training. So these are all self-inflicted. We pushed these two together. Rather than engaging with the Russians, we poked our finger in their eye, driving them over towards the Chinese. The Russians don't like the Chinese. They're suspect of them. We could have used that to our advantage, and we didn't. This is all self-inflicted, and we got 3 more years of this. And you may be saying, you know what? Congress is going to go Republican in 2022. I don't care. The Republicans are as worthless as, I don't know, toilet paper, used toilet paper. They're worthless to me. They have their best ability is to steal victory from the jaws of defeat. Or is that backward? Steal victory from the jaws of defeat, something like that. They suck for the most part. They're not warriors. Whereas the Democrats, as much as I disagree with them, you know what? They play to win. Rhinos, yep. So we're doing this. You don't blame the Russians. Don't blame the Chinese. We did this. All right. What time we got? 6:49. Let's do some short requests. I'm going to go to the members area first. If I have a few minutes, I want to circle back to the futures to see how they settled out. We have Jeff that's looking for EXC, CCL, Larry, TROW, and Forrest with IV, PAF. All right, folks, we're going to be using our friends over at TrendSpider to do the analysis. Use the link below, get 35% off of their automated trading software. Automate your grunt work, speed up your technical analysis, and improve your accuracy. How do you do that? Use their automated trend lines to speed up your accuracy. Click of a button. I'll show you in a moment how to do that. Improve your accuracy by using those automated trend lines. Reduce costly analytical mistakes. How do you do that? You use their alerts. And you're going to see me use them in a moment. We use a rules-based approach. If this, then that. An alert fires off. We take a look at the chart. If it looks good, we execute. If that alert doesn't fire off, we're not interested. It hasn't done what we want it to do, meaning the equity or the ETF. Find winning chart setups with their scanners. And again, time your trades with precision using their alerts. So let's get to it. 35% discount code below. BKKT. Hey, Bo. Thank you for the super chat, my friend. In euros, no less. You got it, man. I'll go over yours next. Thank you, sir. I appreciate that very much. Thank you for supporting the channel. It really helps. Okay, BKKT. This is a weekly chart. Is this a SPAC? I get the feeling that it is. It is. Okay. Just what I'm dealing with. All right. So the monthly chart, we do not have a new monthly low. That's bullish. We've had a ruthless sell-off. Think about the poor son of a bitch that bought way up here. There had to be one guy. Weekly chart. We broke, and here's the automated trend line, folks. This is how you speed up your technical analysis. Take them off, click of a button, put them back on. So we broke support back here the week of January the 8th. Last week was the first week in a long time where we didn't put in a new weekly low. We do have a bit of resistance above right here at this volume shelf at 502. And keep in mind also that if you buy right now, you're going to have resistance at 647, which again marks weekly resistance. So I think it could be bought here because so much damage has been done. And I think that we've probably seen the lows. Stokes are hooking up. Volume was okay. Could have been better, but it was okay. Keep a stop loss right below the lows of the week of, what week is this? The 24th. And I would stay small now. If you did open a position, it's not a short, and then add more on a close above 502. And then ultimately, if and when we close above 655, you can add more there. You leg into the trade, but just keep in mind, you're going to have resistance here at 877, then again here at 968. So a lot of overhead supply, and getting through the $9 per share mark is going to be a bear, a real big bear. Why? It's because that's where you had a lot of consolidation before. So just keep in mind, you have a lot of overhead supply. I think it can be bought. Very speculative. Stop loss right below the lows of the week of the 24th. That is BKKT. ASML. Now, you have ASML that's traded here in the United States, and you have ASML that's traded in, I think it's on the AEX. Correct me if I'm wrong on that, Abel, please. That is the Netherlands Stock Exchange. And I'm very concerned about the AEX. And I'm also concerned about the semiconductor space, which ASML is a part of. You can see here, I outlined on the AEX that we have a head and shoulders setup. We have a tech market here that's already broken. You have the AEX, which is getting ready to break. Weekly view. Very weak, weakening. It hasn't broken yet, but it's ready to. So with that in mind, now we can take a look at ASML. I'm worried about the AEX market. I'm worried about the US market. Let's go to a monthly chart. No new monthly low yet. We bounced off of support back here at 606.30. Actually, no, that's support. That's not where we bounced. The low here was 620.67. Stokes are rolling over. This is a momentum indicator. The last thing you want to see when you're looking at an equity, especially on a monthly time frame and a weekly time frame, it's not like a daily chart where your correction, your Stokes being weak lasts a couple of weeks, maybe, if that. But your weekly and monthly Stokes declining and trading down below 50, which are not there yet. Not yet, close. That could last for weeks to months in a bear territory. So momentum is going the wrong way. You want to see these stocks rising. You don't want to see them putting in lower highs and lower lows. Weekly chart. Now, looking at the weekly chart, they tried to rally it. And if you take a look at the semiconductor sector on a weekly time frame, same price action. It closed up higher, but they were higher. But sellers, institutions, sold into that pool of liquidity. That's why I always say in the mornings, in a market like this, never, ever, ever chase the market higher. It's because you're being manipulated. Financial news media is trying to get you excited, to have you chasing stocks into the morning. Don't fall for it. Don't be a victim. Don't be a bag holder, because all too often they sell that rally. How many days over the past several weeks have you woken up bright green futures only to close the day out red? It's a scam. I shouldn't say it's a scam. It's a psyops. It's a psyops. If you're falling for it, once, okay. Twice, you should know better. So don't let that be you. Don't be a bag holder. So that's kind of what they did last week, right? Yes, we closed up, but can you imagine being the guy that bought at the highs of last week and seeing it at where it closed out? I wouldn't be feeling too good right now. Not after we have rolled over, we rallied up into resistance, and it got sold into on volume. Stokes are trading down below 50. So I don't like the semis at all. And ASML, I'm having a problem with. We rallied just like the semis. They sold strength. That tells me that you probably have more behind this, more selling behind this. Stokes is still very, very weak. Daily chart. Now, here's where things get a little bit wonky, right? I'm very suspicious of market setups like this. What I think happened on Friday was a short squeeze. This time last week, I was saying at this very hour that expect a rally this week. Remember, we went into last week, lots of bearish sentiment. It was a horrible week before. I said we're going to rally. We got that rally. Now, we rallied on Friday, but I warned, I think it's a short covering rally ahead of the weekend, and they're setting up for what looks to be a higher low. Maybe it's a bullish setup. But if we take out the lows of Friday, folks, we're going a lot lower. We're probably going to take out the lows of the 28th of January and head down here. And again, here's the automated trend lines. If you have this, I know I'm pushing the product. Yes, because I make money on it, but it's also because it's a valuable tool. This is the only product I push, TrendSpider. I don't talk about any other product. So click of a button. If you were trading this downtrend on ASML, when would you have known to sell or to get short? Click of a button. Right at these resistance levels. Look, if you would have shorted right here on the second, where you'd be right now. So if this breaks, we're coming down here, probably to around 607 per share. But where that is oddly enough, right where, going back to the weekly charts for a moment, actually the monthly chart, right where we have support. And if this breaks, ASML is in a lot of trouble. We could retrace all the way down to 517 per share. So I'm skeptical right now. When do I get bullish though? Because you may be saying, you know what, you're bearish on the market, you're allowing it to cloud your judgment on ASML. Maybe. So me not being an arrogant person and not believing that I'm 100% right, I'm open-minded. Maybe I'm wrong here. There's a very good chance that I'm wrong. When do I get bullish? Well, right here. Show me a breakout above this resistance level on a closing time frame. I don't care if it's trading there at lunchtime above that resistance level, but at 4 p.m. Eastern Standard Time, it had better be trading above this resistance level or I'm not buying it. we'll keep it active for a while. Now, if ASML breaks through my support level, ASML just became a short. Rules-based approach, folks. That's what I was saying earlier. If my alert up here, I get a breakout on a daily time frame, I get long. If it breaks down below the support level, I get short. Until then, I do nothing. You could, if you wanted to scratch the edge, if we don't gap down tomorrow and we hold the lows of Friday, you could nibble on it. That's fine. Just use a tight stop. We break down below Friday's lows and we close there, I would get out. We are seeing higher lows get put in on our Stokes. That's good. You have a W formation set up. So maybe there is a swing trade to be had here. So I'm not guaranteeing that we're going to break. I'm very worried about the market as a whole. Therefore, I'm worried about ASML, especially since the AEX appears poised to break down. Falcon, thank you so much for the super chat. Thank you very much. Appreciate it. AEHR. Thank you. Tom, close your eye to make money and check Bob for a technical, but I don't pick shop for 780 Sims. I don't know what you mean. BlackRock about a future. Oh yeah. No doubt. Okay. All right. Let's continue on here. So that's ASML. AERH. AEHR. AEHR. Let's go to the monthly chart first. I like the daily chart. Daily chart looks good. Similar to what was it for? BKKT, where we had a ruthless sell-off, but we don't have a new monthly low. That's a good thing. Oh, I want to go back to ASML for a moment. I forgot about something. Seasonality, folks. This only goes back 4 years. Let's go back a bit longer than that. 13 years. February is the second worst month of the year for ASML. So just be forewarned about that, going back 13 years. So it's a good pool of data to guide you through seasonality. All right. AEHR. So monthly chart holding its own. How do we close? Very similar to ASML last week. I worry about this setup here. To me, when you get these topping tails, wicks, shadows, call them cupcakes, it doesn't matter. It's what they imply. What they imply is that rallies are being sold on AEHR. So that is a bit of a concern. Stokes are beginning to bottom. They're not there yet. That means you're going to get a lot of backing and filling. Daily chart. Now, the daily chart I happen to like. You got to wait for a breakout, though. Okay. The longer you could wait in the week to put this trade on, the better. Because you could rally and you could have a false breakout in the first part of the week. The question is, does it close there or does it fade like we have for the past 2 weeks? So I would buy on a breakout and ideally a retest of the breakout point, meaning you break out, next day it pulls back, taps it, and then you get a continuation run higher. That's the way I would play this one. Or if you got a pullback to daily support, and again, I didn't draw these resistance lines and support lines. Click of a button, bam, bam, there you go. Now I know where to set my alerts. Actually, I want to keep a little bit of sensitivity here. Touch, bounce. And we're good to go. I like the Stokes, putting in higher lows. Nice cup, handle formation forming. So AEA chart, I'm concerned about that weekly chart, the topping action, daily chart. It's looking pretty good. Just be very, very deliberate. Wait for that breakout or the retrace back down to support the later in the week as possible. That you can wait to put the trade on, great. If we close at the highs of the week, that is really, really a good setup. So good luck with the trade if you do it. And again, thank you for the super chat. Snap. We're going to circle back to the futures in a moment. As soon as I get done with these symbols, I'm going to cut it off with what I have right now. So that way we have time to take a look at the futures action. Snap. Really good price action on Friday. The thing to keep in mind here is that, yeah, earnings were very good, but I don't care how good earnings are. This is a growth stock, and if yields press up higher and you see the XLK roll over, which is the technology ETF, if that rolls over, you see the ARK Innovation Fund roll over, all those proxies for growth. If they roll over, Snap is going along with it because it's still an expensive stock. Why are stocks getting taken to the woodshed of late on poor earnings? Because they know that rate hikes are coming and they need to reprice these growth stocks. So that's why the great earnings report on Friday may, in the longer term, not be as helpful as one might think. It was great price action, but it's probably a lot of shorts getting squeezed. So keep that in mind. So on the week last week, actually on the month, there's a monthly chart, it's a week, same thing. Beautiful bullish key reversal bar, but the month is still early, so forget about the monthly chart. Let's go to the weekly chart. It's going to look the same. Really nice price action. Note where we reversed off of. Automated trend lines, folks. I didn't draw these lines. There you go. Bullish key reversal bar. Stokes looking the bottom. They have a W formation. Very, very nice. Resistance up here at 41.68, then up here at 45.15. So if we were in an environment where people weren't so wonky worried about rising interest rates, I'd say, you know what? Scratch the itch, put a trade on here. But I'm reluctant to. What I would say more is this. You have a breakout. Wait for the retrace to see whether or not this breakout point here is going to act as support. It's going to happen. Set your alert. Touch, bounce. We'll keep it active for a few weeks. and we're good to go. Daily chart. Daily breakout as well. So you're going to get a retrace here the coming days, especially if the market weakens up. But if we fail to hold these support levels and we break to new lower lows, Snap is just another growth stock. Doesn't matter what the earnings are. CCXI, Chemocentrics. We have a daily breakout. And folks, I never heard of this company before. I had this chart up for about 2 seconds. How do I know it was a breakout? Automated trend lines. Let's go with a monthly chart first to get a feel for where we've been. We're right now in a macro view. We're in a triangle formation. And again, where did I get these trend lines below, the support levels below? Click of a button. Off, on. Weekly chart. So here's your resistance level at around 88 bucks a share. Let's overlay monthly support and resistance levels. You can see here what I've just done is on the weekly chart, I've overlaid monthly support and resistance level. This is what you call multi-time frame analysis. So I know, look at where we bounced right off of monthly support. So here's my floor on this stock. If we break down below the lows of January the 24th, I know I got to stop out. It looks as though we had a pretty good close last week. Resistance is going to be up here at around 87.50 to 88 bucks a share. Daily chart. We have a daily breakout. I think the stock's a buy. I like it. CCXI, bullish. We have a little bit of seasonality data here. February is usually up 60% of the times. No real great edge there. HP. Ulrich and Payne. Daily chart looks really, really nice. Oh, this is the driller. That's right. That explains it. Monthly breakout here. This is a beautiful chart. Early stage macro breakout. Note how, if you go back in time, we were in a bear market. How do you know when the bear market's over? The beginning of it is when you stop going down, you begin to put in higher lows and higher highs, but we haven't really broken out until this month. And we're threatening to take out the highs of November. If and when we do that, we close above those November highs, it's game on to the long side. I think that these shares can be bought right now, my own opinion. But we're using a monthly chart. It's early in the month. We have a long way to go. Weekly chart. We're right at weekly resistance here. I would wait for a retrace on a short-term basis. Let's go to the daily chart. Overlay on top of it. Weekly resistance. And you can see in solid line on the daily chart are the daily support and resistance levels. In dashed line are your weekly support and resistance levels. So you can see that despite the fact that we broke out on Friday, we have resistance immediately above on a weekly time frame. So with that knowledge in mind, I can't say to buy these shares right now because you have resistance immediately above. But I do think that you're probably going to get a retrace back down to support at around 88.75. So I'm going to create an alert down here. I'm going to keep some sensitivity on. It doesn't have to be exact on the penny. Because I want to buy the shares as far away from that weekly resistance level as I possibly can. And we'll keep it active for a few days. And we're set. Here are my alerts up here. Let's go to seasonality. Going back 13 years. February's an okay month. It's certainly not the best month. The time to buy this stock historically is in August, because it's rarely up in August. And then you got this huge rebound in September. So this is really great data. Buy at when there's blood in the streets in August and enjoy the rally in September. That's a winning trade. So that's HP, looking really good. And the sector is where you want to be. EXC, Exelon. Monthly chart. All right, so monthly chart, we're at resistance, right at it. As a matter of fact, we hit it and we backed off. Weekly chart, again, at resistance. This is my manually drawn trend line. But this one here is the automated. Take it off, put it back on. So what I would do here, I wouldn't buy right now, but if you're looking for a buy point, I would wait for the retrace, touch, bounce. A little bit of sensitivity. Good volume. I love rising sequential volume. This is good stuff. Really, really good stuff. Now, if we close above this resistance level, that's bullish as well. So if by next Friday we have a breakout and a close above resistance, well, guess what? It just became a buy. But it's a rules-based approach. If this, then that. Just because I like the stock right now doesn't mean I'm going to buy it. But if it breaks out, okay, I'll buy it. Even though I have to pay up more, by paying up more, I increased the probability of profit. Or if I wait for a retrace back down to support to see if that what was resistance back here now acts as support, I've now increased my probability of profit. And I'm managing my risk. So if we do get a pullback, this is the reason why I wrote long entry or add. Keep that long, just in case we go into consolidation. We'll keep this active for 45 days. So if we get a retrace back down here, I would nibble, buy some stock. Then if we break out above resistance, I'll add more, because the path of least resistance is clearly to the upside. Daily chart. You can see how it's stalling out here. I have 2 sequential days, no new daily high on Friday. It's seeing some selling pressure up here. So we're going to rely upon our weekly support and resistance levels. I wouldn't do anything with this right now. It's certainly not a short. Volume is still strong to the upside. That's EXC. CCL. Monthly chart. we're trying to put in a higher low, which is good. Am I seeing an urgent need to go running into this trade right here, right now? No, we're just in the consolidation range. Weekly chart. Let's bring the drawings back up. Let's start fresh. So you're in a tightening triangle formation, higher lows. What you're lacking in this triangle formation, as is usually the case, that's why it's a triangle formation, you're lacking a higher high. So what I'd be looking for here is a breakout. If you wanted to scratch the itch, I'd have zero problem with it putting on a small trade, a speculative trade. Use a stop loss right below the lows of last week will be good. Now, if we break out, that's good stuff. You add more. And that breakout points at around 22.25 per share. Seasonality, going back 13 years. February is a pretty good month, with December being the best. Let's go to a daily chart. Yeah, you're in a consolidation range. Yeah, I think the economy's opening up no matter what. These mandates, people are ignoring them. People are tired. People want to go on cruises. So I think that, if you bought this stock now, I don't think you're going to be regretting it 5-10 years from now. So if you wanted to buy a few shares, tuck them away, and tell the story to your grandkids 10 years from now, if you're that old, you'll be telling them a story about pretty sad times. But you would have stepped in when nobody else wanted the shares. So I don't know how much value is here. I'd certainly be interested in what the short interest is on CCL to see whether or not we have a short squeeze. Hey, Jody, nice to have you. All right, so that's CCL. TROW. Monthly chart. No new monthly low. Good stuff. Stokes is still declining, though, and it's early in the month. I don't like last week's price action. I hate topping action. All right, so you have resistance up here, 163.43. Support. Down at 143.82. Maybe we're heading into a consolidation range. I don't see an urgent need to go chasing these shares right now. Daily chart. Possible higher low, but only a possible higher low. Note where we bottomed out. The automated trend lines. First time I'm ever going over the stock. I never drew these lines. Click of a button. Seasonality. Not the best time of year, but an okay time. It's better than 50%. The best time of the year is August, buying the depths and enjoying the spring, early winter rally. That's TROW. IVPAF. Oh, Ivanhoe. just grinding higher, steady Eddie. It's a trading stock. It's in an uptrend channel. Buy on the pullback, sell on the tap of the upper band of resistance. This is a perfect trading range stock. Textbook. I don't like this topping tail here on the January candlestick. It's a bit of a concern, but the fact that we moved up and into the wick of the January candlestick, that bodes well for the shares, but a little bit of caution here. Weekly chart. You're right in the middle of a trading range. We did hold this breakout. I believe this is an automated trend line. Yeah, automated trend line. The algorithm's picking up it should be now a support level on Ivanhoe. Watch for a retrace. If you're looking for an entry point, you may want to look for a retrace of this support level and open it up there, and that way you put a stop loss right below it. Daily chart. Daily chart looks good. I think that you could be seeing a breakout. You saw it. You have a breakout on a daily chart. So IVPAF looking good. Just beware of that monthly chart. A little bit of suspect there. All right, let's circle back. Let's take a look at the futures. I'm certainly over by a half hour. Gold looking really, really good here, folks. Really, really good. Wunderbar. All right, what else do we have? Let's go take a look at equities. 1 hour chart. Not looking good. This is the S&P 500. Down 0.13%. The Russell down over 0.25% now. So as I'm looking at these, I want to bring your memory back to what we were talking about earlier. I mentioned that I was concerned about that Friday candlestick at around 3 o'clock. It was a pretty candlestick. By 3:30, I shouldn't say that. By 3:45, you go onto a 15-minute chart, and they were selling it. So it didn't close pretty. We're weakening up here. We just dropped. We're down just shy of a third of a percentage point. So my worry is that was a short covering Friday, and I'm worried about taking out the lows of Friday. If we take out the lows of Friday, you're probably going to see some programs selling. So if they paint this tape tomorrow morning and it's green, don't go chasing the market. If it's red, don't go chasing the market. This is not a buy the dip market unless, of course, we are at extremes, meaning you have S&Ps or NASDAQ 100 trip Qs with RSI, 15-minute, half-hour, hourly charts with RSI down below 20, getting beaten like a pulp. You want to buy it, step in for a quick scalp, fine. We're nowhere near those levels on a daily chart, and I fear that we're going to take out recent lows on all of these indexes. And the reason is that we have inflation skyrocketing, a Federal Reserve that is doing nothing about it. That's their mandate, to fight inflation. They're doing nothing about it. In fact, you could argue they're throwing gasoline on the fire, making it worse by buying all these bonds. NASDAQ 100 down over a quarter percentage point, not looking good. Circling back to silver, silver looking good. Copper looking good. This is where the money's going, folks. Gold looking good. So it's a tale of two markets. Commodities, equities. I would avoid growth equities right now. I would look at commodities. I would look at banks on rising interest rates. In fact, let's circle back and take a look at the bond market. So bonds are up right now, which means yields are down. But the problem is that this rally, see this topping action here already? This is it's not a healthy rally. So I wouldn't be the least bit surprised to see this weaken, fail. And if we break down below these recent lows, that means yields are moving up higher. So just be very, very careful with this market. Nice job. What's wrong? I'm going to try. I need to get on Rumble. I don't know why it's so complicated, but I wish they would integrate better with my streaming service. What is your bear case for gold? My bear case for gold is that the dollar responds bullishly to the rising threat of yields. But if you take a look at the weekly chart of the US dollar, it was a fairly ruthless sell-off last week. If we get a continuation move lower, that is going to fuel gold dramatically. It's going to send gold a lot higher. And when the markets realize that they already know this, it's a slowing economy, as by the yield curve, which we went over earlier. They know that we have inflation. That's no secret. That's out there. So slowing growth and inflation, that's stagflation. What's the only cure for stagflation? Well, you got to have higher interest rates. Once the markets sniff out that the Federal Reserve is not serious about being overly aggressive with fighting interest rates, they are going to take gold and they are going to rip it through the ceiling. And when equities begin to fall apart, either vis-a-vis because of inflation or because the Federal Reserve raised too much for equities to handle, they're going to have to go back and start up the printing presses again. And when they do that, they're going to kill the dollar and they're going to send gold, silver, copper, oil right through the roof. So if you want to preserve your buying power, you got to think about owning commodities. You got to get out of U.S. denominated assets like equities. Commodities are going to outperform the U.S. dollar. In fact, a weaker U.S. dollar is good for commodities. It sends it up higher. So you retain your buying power, and you can also profit. With gold, you're retaining your buying power, right? You're maintaining your wealth. If you want your wealth to grow, you look at the gold mining stocks. You look at the silver mining stock. They're going to go 2x times gold. The silver mining stocks are going to go 2-3 times because they're far more volatile than the price of silver. So that's where you need to go. So the financial news media, they want you to buy stocks. There are other places to make money. You don't always have to be in equities. So don't let them take parking space up in your head. And folks, if you didn't hit the like button, please, it helps me out with the YouTube algorithm. If you could smash that like button. Don't forget about TrendSpider. Discount code below. Take advantage of them. 35% off, cheapest price on the web. Back to the chat. Just wanted to challenge your thoughts about gold, since you've been bullish on gold for a while now. Gold is like you love it. So that's a fair point. So yeah, I've been bullish on gold for quite some time now, and we've had our rallies, and those rallies have pulled back. Remember when I got bullish on gold was in 2015. We had the first interest rate hike in December of 2015. Gold got knocked for a loop. We started building the gold mining trade. From that point forward, gold went on to take out all-time highs, August of 2019. It's since pulled back and went into we had a cup handle, and now we've broken out of that consolidation back in December, consolidation in January. This month, more consolidation. I think we're breaking out this month. You see it close above 1850 on gold, spot gold. We're taking out new all-time highs probably by the summer. Now, what have I done with my trades while we've been holding them? If you remember, you know that every single week I sell covered calls and big lots of covered calls. So we're generating cash flow off of those positions. So it's not as if I've just been sitting in gold stocks and waiting for a breakout. No, we've been using them as an ATM. We're generating cash flow by taking a premium on the covered calls. Simple as that. So the trade for us is working out great. It'll work out fantastic once we get the breakout, and I'm selling covered calls into spikes higher, into resistance when those premiums are inflated like this. So that's the gold trade. Thanks for the challenge. Challenge me anytime. I love it. Tom Liu, Nugget, or I own them both. Oh no, USLV. No, I don't own USLV. I own the silver miner ETF. I forget what SLV? No, that's the silver ETF. SILV. SILV. Nugget or USLV, 6 of one, half a dozen of the other. One's a gold mining play, which is the large caps. I'm not sure what USLV is. I'm assuming that's a long of just silver. So your call on that. It doesn't matter to me. I'm neutral on both. What Fed would follow Henry Kissinger's footsteps? What Fed should follow Henry Kissinger's footsteps? Find something to back the dollar. Underground gold is okay too. Stem cells or even chicken nuggets instead. That's crazy. That's good. That's Nucor. It's an industrial metal. So if you see a recession, they're not going to do well. They're going to have a problem. But you take a look at copper, and copper in a weekly time frame. Dr. Copper's looking like a monster. Out of curiosity, to bring up NUE. Let's go to a weekly chart. Oh, this is a weekly chart. It's bouncing back nicely. It's in a consolidation range. It's looking good. The Fed should follow. So the reason why the Fed can't follow Volcker is that you got to remember, Volcker back in the late 1970s, early 1980s, the United States had very little debt, and we were a creditor nation. We had only opened up relationships with China, normalized relationships with China 4 or 5 years earlier. So China was nothing. Zero. It was a third world country. In certain ways, it still is. So the United States was in a far better position to raise interest rates. And our dollar had far more respect around the world. It still has respect, but you have far fewer transactions being made in US dollars, and you have, because we've weaponized the US dollar. So you have countries that are just dying to getting away. Excuse me. Countries are dying to get away from the US dollar any way they can because they want to avoid the US banking system and sanctions. So China and Russia and Iran are at the forefront of doing that. If I was to tell my mom to take 30% of her portfolio into gold, what would you tell? What would I tell her to plant it? That 30% of a portfolio is a lot, especially your mom's portfolio into gold. I don't know what her risk tolerances are. Usually people put a token amount, 5-10% into gold. And that's just to hedge the portfolio against inflation. So probably, if your mom's is an older person, you just want to keep it in, ideally in physical gold, so you can avoid the paper markets, and you're outside the U.S. banking system. That's how I would do it, or just buy the GDX, which is the large cap mining stocks. Those are less volatile. LIW low. I'm not sure what you mean by that, Falcon. Low. I'm not sure what you mean by that. Thank you very much, Jeff. I appreciate that, folks. Good. Thanks for joining in. I really appreciate the time you spend here. Thank you. It's my honor. Yeah, always diversify, no doubt about it. Thank you for being here. Everybody have a great night. I'll talk to you soon. Have a profitable trading week. Be well.